A strong dollar, is it proving too much of a headwind for gold? That's the question. Hedge funds have pared back their bullish bets on bullion to the lowest level in more than 2 years. That's a drop of 40% as the metal fell below $1,300 an ounce. Now, it's sparing the biggest weekly price decline since December. Here to talk us through the markets and what you should do is Rhodes Precious Metals Consultancy, Jeff Rhodes. Welcome to the show. Good to see you. So here we are. I mean, the speckies have sliced and diced on the position. Net longs are down by 40%. That's fast money, but that's quite a big move in the space of 1 week. That's a big flag in the sand for me. What does it say to you?
Look, I think it's a reaction to the failure for the 5th time in the last 2 years to break above. There's resistance between 65 and 75, 1365, 1375, and it failed badly to go through that. And we've seen the markets fall back. The break below the 200-day moving average at 1307 was a big sell signal on the charts. Then below 1300, psychologically damaging. I think the outlook now is for a slow grind lower over the summer. And so why stay long? I think that the reason they're exiting, they're more likely to exit and come back in at 1250.
To what extent, I talked about the dollar at the start of the show, one of the longest winning streaks, you know, for the 5th week in a row. To what extent is the dollar's strength? Do you base your view that dollar strength remains?
Yeah, look, I think the dollar looks as though it's going to move a little bit higher. If you look at the DXY, probably got another big figure on top. So if that happens, the gold will come lower. Definitely, strong dollar, weak gold. That correlation or reverse correlation has always been the case.
Yes.
Gold is an alternative currency to the dollar and to all currencies, but certainly strong dollar, weak gold is still a factor.
You see, I look at the headlines this morning are about China and the US, China promising to buy more goods, not the $200 billion, but it's a step along the road towards easing tensions. North Korea and Trump are expected to meet. If somebody said to me 6 months ago that political angst was going to dissipate that amount, I would probably have sold gold. So here we are. I don't think we're going to get off to a great start this week, are we? I mean, those are two quite bullish political situations, but bearish for gold.
Yeah, look, they are. However, there are other countries that are still buying gold. Russia, Turkey, Kazakhstan. Certainly Russia and Turkey is very interesting, adding to their gold reserves. And
right.
Two currencies very much under pressure. You know, Turkish lira very much under pressure this year, as is the ruble again. And so I think you have to look at gold in a wider context, not, as I say, not just against the dollar, but an alternative currency to all currencies, definitely benefiting from central bank buying in Q1. It's really, I think central bank holdings really are on the way up even more. We don't even see China. China definitely is buying. You see so much demand in China. It's not all private.
But the physical numbers that I've looked at for the first quarter, physical demand is down by about 7%.
It is.
That's the lowest since 2008. Now, that doesn't tie up with what you're saying in terms of the central bank demand side.
No, it does, because the reason demand is down is because India, Q1 against Q1 2017, is down 50%. And so really, India is the world's second largest, or some would say largest, physical buyer of gold, and that's down 50%. Against that, you've got this buying from central banks. Also, you've got ETF buying. The rate of increase in ETF buying is lower than last year, but still it's up. And so you do have some physical buying. Investment buying in physical is there. Central bank buying in physical is there. You've got investor selling in terms of bars and coins, much lower than last year.
Where are we with silver? Because you make the point, look, it keeps having these valiant efforts to break out on the upside. It just doesn't happen. What's holding us back?
Look, silver is, I was looking at before it came in, silver over the last really 5 years has been stuck in the $3 range, 15.5 to 18.5. Eventually that's going to break, and it can't go down very far. So where is it going? Silver could easily, in my view, outperform gold significantly in the next 2 years. Keep an eye on silver. Once it gets above $18.5, very quickly you'd see it in the mid-20s.